In the unpredictable world of money, most people chase the next big win, oblivious to how their fortunes are quietly slipping through their fingers. Benjamin Graham used to say that the market is a voting machine in the short term and a weighing machine in the long term. And for countless investors, the weight they lose isn't just financial, it's emotional. They don't notice the small leaks in their judgment until the damage is already done. You see your friends bragging about cryptocurrency booms, real estate takeovers, or overnight stock surges, and you wonder why your account isn't following the same upward trajectory. It's not because you're unlucky. The market silently punishes impulsive decisions and rewards only those who can separate emotion from judgment. Graham believed that money never disappears. It flows silently from the impatient to the disciplined. Perhaps you felt it too. That sinking feeling you get when you buy too late, sell too early, or freeze when the opportunity is gone. At first, it seems like a small mistake. But over time, these small miscalculations accumulate, becoming the invisible taxes you pay for emotional investing. Losses don't always appear as dramatic red numbers. Sometimes they appear as moments of what-ifs that follow you like shadows. And they always begin insidiously. A slight surge of confidence. A whisper of greed disguised as optimism. A belief that this time, you've seen something others haven't. Graham said the market has a cruel way of flattering you just before it teaches you a lesson. It lets you taste a small victory, enough to lower your guard, and then suddenly delivers the blow. You convince yourself you're thinking rationally, but in reality, your decisions are driven by the same instincts that once drove people to flee from predators: fear, excitement, survival. Yet in the world of investing, these instincts don't keep you alive. They silently consume everything you've worked for. But whether you realize it or not, every mistake has a pattern. Every loss has a reason. And every investor who finally breaks free from this cycle has a moment of enlightenment. The realization that the problem isn't the market at all, but their own behavior. Graham believes that when you understand your emotional vulnerabilities, your financial life begins to change. The same market that once punished you begins to reward and congratulate you. Not because it has changed, but because you have. Most people don't notice the junctures where their financial futures quietly shift direction. This doesn't happen during major crashes or dramatic headlines. It happens in simple, ordinary moments, in small decisions that feel harmless at the time, but gradually shape the shape of your wealth. Graham often said that the investor's greatest enemy is not the market itself, but the unanalyzed habits that drive their choices. Think of a time when you told yourself, "I'll buy later," after it's a little more active, only to see the price rise unattainably. Or the opposite, you jumped in too quickly because it felt exciting, only to see your investment plummet immediately afterward. These aren't coincidences. They're reflections of something deeper. The adrenaline rush between what you know you need to do and what your impulses are driving you to do. You might think a missed opportunity or a poorly timed sale is just a minor loss. But Graham likened these mistakes to erosion, which happens slowly, insidiously, and destructively over years. You might not notice the damage in a single day, but within a decade, the difference becomes staggering. People think wealth is built by big gains, but in reality, true wealth is preserved by avoiding small, unnecessary losses. And then there's the illusion of control. Investors convince themselves they're making sound decisions, but in reality, they're reacting to news, popularity, and the opinions of people who know even less than they do. Graham believed the market thrives on people who think they understand more than they actually do. This rewards humility. Perhaps you found yourself updating your portfolio hourly, imagining that small ups and downs mean something significant. Perhaps you felt the urge to do something because you're uncomfortable with uncertainty. But the uncomfortable, liberating truth, is that great investors rarely take action. They wait. They think. They defend their capital as much as others do, chasing returns. But that's precisely where most people fail. They chase noise instead of value. They follow excitement instead of fundamentals. They react emotionally instead of strategically. And each time, they impose a small price on their future. This price, like interest, grows exponentially over time, but in the opposite direction. Yet, there's something hopeful about all this. Because the moment you start to recognize these pitfalls, everything changes. You start to see the market differently, not as a battlefield filled with enemies, but as a landscape filled with opportunities where patience awaits. You begin to see that advantage isn't about predicting the future, but about controlling yourself long enough for your money to work. And when you notice this shift, something remarkable happens. Losing becomes harder. Winning becomes boring. And wealth becomes inevitable, the natural consequence of disciplined behavior. There comes a time in every investor's life when they finally see this pattern. The market isn't trying to beat them. Their own choices are. Graham believed that clarity begins when you stop blaming external forces and start examining the subtle emotional triggers behind every financial misstep. And strangely, once you start seeing these patterns, they pop up everywhere. You realize how you seek reassurance before making a move, even though true conviction doesn't come from the crowd. You begin to see how hesitation, even though it's often far more costly than a well-considered risk, is disguised as caution. You begin to realize how easily excitement masquerades as opportunity. And with each realization, your relationship with money shifts, not dramatically, but quietly, like slipping into a dark room at dawn. Sometimes it hits you in the most ordinary moments. Waiting in line for coffee, sitting in a parked car, checking your phone at midnight. You suddenly remember the time you sold too soon because the red numbers frightened you, or the time you bought too quickly because the green numbers felt like an invitation. None of this had anything to do with strategy. It was emotion, a pure, primal emotion, that drove the wheel. And the market, patient as ever, led you straight into the ditch. Graham said that the biggest danger in investing isn't ignorance, but the illusion of knowledge. You think you understand a company because you read a headline. You think you're seeing a trend because a chart looks interesting. You believe you're acting early simply because you want to. But behind each of these beliefs lies a silent truth. You weren't analyzing, you were using probability. But the real turning point comes when you begin to see the cost of those probabilities. You start noticing how the money you lost didn't vanish. It simply went to those who waited while you rushed, or those who studied while you reacted. The market redistributes wealth every day, not based on intelligence, but on discipline. And when that reality finally sinks in, something begins to harden inside you. A quiet resolve not to be on the wrong side of that transfer again. You begin to slow down, to think differently, to observe without acting. You no longer feel the urge to chase every ripple in the market because you've started to understand that true opportunities don't shout, they whisper. And the quieter you become internally, the more clearly you hear them. For the first time, you're not just in the market. You're studying it, weighing it, respecting it. And in this shift, you begin to feel something unfamiliar, control. Not over the charts or the news or the economy, but over yourself. And that, Graham believed, is where real wealth begins. The quiet control Graham spoke of doesn't come from knowing every number or predicting every trend. It comes from understanding the limits of what you can know and acting only within those boundaries. Every investor thinks they're smart enough to outguess the market, until a single misstep reminds them otherwise. Graham called this the margin of safety, but it's really a lesson in humility disguised as a financial rule. You begin to notice patterns in your own behavior that were invisible before. The times you ignored research because you trusted a gut feeling. The times you bought because everyone else was buying. The times you sold because fear screamed louder than reason. Each memory is a mirror, reflecting how easily humans let instinct override insight. Yet with reflection comes clarity. With clarity comes discipline. And with discipline comes a kind of freedom few ever taste. The most astonishing part is how subtle this freedom feels at first. It doesn't announce itself with fireworks or headlines. It's in the way you no longer panic when the market dips 10% in a single day. It's in the calm curiosity you feel when reading quarterly reports, rather than a compulsive need to act. You begin to ask better questions instead of hunting for answers. You start to see that success isn't about winning every trade. It's about avoiding the mistakes that compound quietly over years. And slowly, a new perspective emerges. You realize that investing isn't a sprint. It's a patient, sometimes monotonous, journey of learning and self-control. Wealth, Graham taught, is built the same way, quietly, methodically, and often in ways that feel almost invisible until years later. You stop chasing what glitters, stop listening to hype, and start listening to evidence. The small, steady signals that others overlook because they're too busy reacting. This internal shift begins to ripple outward. You start noticing opportunities in places you once ignored. A company undervalued by the crowd. A long-term trend everyone else dismisses. A risk everyone fears. These are the chances that truly reward patience, discipline, and insight. And the more you see them, the more you understand Graham's greatest lesson. The market is a mirror, but only if you stop pretending it's a crystal ball. By the time you reach this stage, fear and greed lose much of their power over you. You don't stop caring. You just stop letting emotion drive your decisions. You've learned to observe, calculate, and act with reason. And in that calm, deliberate approach, you find not just financial advantage, but a kind of quiet confidence that no market fluctuation can shake. The lessons of patience and discipline Graham preached finally start to show their real power during moments of market turbulence. When headlines scream doom and the crowd panics, you feel something unexpected, calm. Not arrogance, not certainty, just a steady awareness that most chaos is temporary, and that reaction without reason is the true danger. You see investors around you acting on impulse, yet they mistake motion for progress. You, by contrast, have learned to measure stillness as strength. It's in this quiet space that insight begins to flourish. Patterns that once eluded you now stand out clearly. Overvalued companies become obvious. Hidden risks reveal themselves. Opportunities appear where others see only fear. You realize that the market is less a battlefield and more a teacher, patient, impartial, and unforgiving of shortcuts. Graham didn't just want you to make money. He wanted you to think differently, to respect probability, and to understand the invisible forces shaping every price tag. You start making decisions differently, too. Every investment is now preceded by questions like, what could go wrong? Am I paying too much? Do I understand this fully? This isn't hesitation, it's strategy. It's knowing that avoiding losses often compounds more wealth than chasing wins ever could. You notice a pattern in your own growth. The longer you resist impulsive moves, the clearer your judgment becomes. Small victories accumulate quietly, almost unnoticed, until suddenly, you're ahead not just financially, but mentally. Then another truth emerges. The market rewards patience, yes, but it rewards even more. Emotions distort judgment. They distort probabilities. They turn small risks into perceived disasters. Graham's wisdom lies in teaching you to step back, detach from emotions, and see reality for what it is. This is a skill that goes beyond investing. It can be applied to decisions made in life, business, and personal development. The calm confidence you develop begins to reflect on the outside world. People notice it and sometimes envy it, but few understand its foundation. Disciplined thinking honed over the years. You now see market fluctuations as natural rhythms rather than threats. You no longer chase trends, you interpret signals. You've internalized that success is a slow, deliberate process based on repeated reasoning rather than occasional strokes of luck. And as this mindset solidifies, you understand Graham's final lesson. Wealth is fleeting, but wisdom, the ability to act correctly in the face of uncertainty, is eternal. Time is no longer your enemy, but your ally. The compounding effect of disciplined decisions is subtle, almost imperceptible at first, but over months and years, it gains momentum that feels almost unstoppable. You notice how small, careful moves, avoiding overhyped stocks, choosing quality companies, and being consistent, quietly multiply, creating a foundation that the impatient can never reach. This isn't about luck or clever tricks. It's about methodical, unwavering action over time. In these moments, you also begin to appreciate the invisible margin of safety Graham emphasizes. It's not just a numerical buffer. It's a mindset, a buffer against errors in judgment, and a shield against the unexpected. You begin to think in terms of probabilities rather than certainties. You accept that mistakes can happen, but when they do, they don't overturn your entire strategy because you've built your foundation wisely. This approach provides a serenity you've never known before, an unwavering realist mindset in the face of chaos. Another truth emerges. Patience alone isn't enough. Knowledge and understanding are the real drivers. You begin to read financial statements differently, noticing nuances others overlook. Revenue streams, debt structures, and cash flows aren't just numbers. They're narratives about a company's true strengths and weaknesses. You realize that every stock, every market movement, tells a story, if you have the discipline to read it. And then comes the hardest lesson of all, resisting the crowd. It's easy to get caught up in excitement, panic, or greed. Nearly everyone around you reacts emotionally, chasing trends or fleeing at the first sign of trouble. But you've learned to pause, ask questions, and consider alternatives. This independence of thought becomes a superpower. You're no longer playing the market, you're interpreting it. You've internalized Graham's principle that true investors are neither bullish nor bearish by default. They are realistic, analytical, and patient. Finally, a quiet pride settles in. Not the pride of wealth, but the pride of understanding and self-control. You've discovered that the highest returns are measured not just in dollars, but in confidence, clarity, and resilience. The market is still unpredictable, but your approach is now systematic, stable, and sustainable. In essence, you've become what Benjamin Graham envisioned, an investor who survives, thrives, and grows through discipline, wisdom, and patience. Time has a rhythm you now understand. Every investment decision, every calculated risk, feels like a step in a long, deliberate dance. You realize that market volatility no longer frightens you. It teaches you a lesson. Every correction, every unexpected decline, is a lesson in disguise. You begin to see opportunity where others see problems, and you realize that patience, when combined with insight, becomes even stronger. You also understand the profound value of temperament. Intelligence alone isn't enough. Emotional discipline separates consistent winners from stumblers. When others act out of impulse, fear, or greed, you pause. You wait. You observe. And when the moment is right, you act with precision. Over time, this restraint translates into results that feel almost effortless, a testament to your own control, not the market. Another layer of understanding emerges. Diversification isn't just a safety net. It's a way of thinking about possibilities. You're no longer chasing the best bet or the sure thing. Instead, you're collectively building positions that tilt the odds in your favor. Every decision is carefully weighed, every stance justified. And when the inevitable mistakes occur, as they always do, they don't destroy you. They are internalized by the structure you've established and the discipline you've cultivated. You're also developing a new respect for simplicity. You're no longer drawn to complex strategies, flashy trends, and high-frequency maneuvers. You gravitate toward what works, what endures, and what has stood the test of time. Companies with strong fundamentals, clear profits, and resilient business models capture your attention. Complexity is alluring, but wisdom lies in clarity. In the end, the true measure of success emerges: confidence, not arrogance. You've built a process that can weather storms, adapt, and grow. Graham's once theoretical lessons now live within you, shaping not only the way you invest, but also the way you approach life's decisions. Wealth is an outcome, but mastery, the ability to deal with uncertainty with calm, logic, and patience, is the true success. And in this mastery, you find a quiet satisfaction that no market boom or bust can shake. As the cycles repeat, you see the pattern clearly. Markets rise, optimism spreads like wildfire, and the crowd is intoxicated by its own success. Yet, your feet remain firmly planted. You know that every rise carries the seeds of its own correction. You don't need to predict the next decline. You simply need to be absolutely certain that your financial, emotional, and strategic position can withstand it. Ultimately, survival comes before profit. The real advantage is preparation. While others are dazzled by excitement, you accumulate reserves, cash, optionality, and patience. Realize that opportunity rewards only those who are ready to act, not those who are caught up in the excitement. Fear and greed are constant companions in every age, but they can no longer manipulate you. You've learned to react rationally, to carefully weigh every move, and to remember that the greatest compounding force is not movement, but time. You also realize the importance of independence. Following others is a shortcut to temporary comfort, but it's actually a hidden trap. The herd reacts to headlines, rumors, and illusions. You step back, analyze the fundamentals, and act according to logic. This detachment becomes your most powerful tool. You stop competing with noise and start competing with patience. In recessions, it's not the bravest who win, but the calmest and most prepared. Debt, leverage, and speculative shortcuts lose their appeal. You see them for what they are: accelerators of destruction. The lessons of history are clear. Those who overborrow in good times are the first to lose in bad times. You realize that true courage isn't about daring. It's about resilience, liquidity, and rationality. You don't need heroism. You need consistency, discipline, and the ability to wait. Wealth now becomes a quiet game. Not flashy, not noisy, but strong in its stability. You notice others rushing desperately to recoup their losses. But your restraint allows you to profit when prices don't align with value. You understand that true profits often come from doing nothing, from resisting the urge to overreact. Doing less, but doing it right, creates far greater rewards than sustained activity. At this point, you've internalized the secret many overlook. Recessions don't destroy the disciplined, they elevate them. They reveal who planned, who waited, and who controlled their emotions. Wealth is silently transferred from the reckless to the prepared. Every crisis is an auction of opportunity, and patience is your ticket. Finally, you accept a profound truth. Markets always test people, not numbers. Fear, greed, and impatience are eternal. You are the one who changes. By mastering your temperament, valuing liquidity, and remaining rational when others panic, you ensure not only your survival, but also your growth. You'll be the quiet winner, the patient investor who sees the world in cycles, not crises, and understands that the greatest fortunes are made in silence, through patience, preparation, and refusing to participate in foolishness. If you found this video insightful, be sure to hit the like button and subscribe for more stories and lessons you won't hear anywhere else. Don't forget to turn on the notification bell to be the first to see our latest uploads. And remember, knowledge is only valuable when it's put into action. Stay curious, be patient, and always think independently. See you on our next mysterious journey.